Before looking at some interpretation guidelines, bear in mind that relative rotation graphs are not a trading system and there are no predefined trading rules or signals. Look at RRGs as another type of charting method that is open to interpretation. Different people looking at the same chart will come up with different interpretations. Here are some rules of thumb you may want to follow. RS ratio is more important than RS momentum. RS ratio is also the preferred metric for ranking a group of symbols. The table shows each RRG ranks the symbols by quadrant according to their distance from the benchmark, crosshair on the RRG. The leading quadrant, green, is first. The improving quadrant, blue, is second. The weakening quadrant, yellow, is third and the lagging quadrant, red, is last. As the example below shows, XLK is the furthest from the benchmark in the leading quadrant and XLE is the furthest from the benchmark in the lagging quadrant. This often coincides with tail length because the securities with the longest tails are often the furthest from the benchmark. The rotational patterns are not always perfectly circular and will not always rotate through all four quadrants in a clockwise manner. These are, after all, financial markets driven by fear and greed. A historical trail can remain on the right side of the RRG when there is a strong uptrend in relative performance. This means RS ratio is holding above 100, and RS momentum is fluctuating above, below 100. Conversely, a historical trail can remain on the left side of the RRG when there is a strong downtrend in relative performance. This means RS ratio is holding below 100, and RS momentum is fluctuating above, below 100. In general, a cross from the left half to the right half signals a new uptrend in relative performance. This means RS ratio has moved above 100. Conversely, a cross from the right half to the left half signals a new downtrend in relative performance. This means RS ratio has moved below 100. The underlying trend following model that powers RRG includes a lag period, as do all trend following models. This means there will already be upward movement in the price relative before the RRG line actually crosses into the leading quadrant. Similarly, the price relative will peak and move lower before the RRG line actually crosses into the lagging quadrant. Symbols in the leading quadrant should be on your buy list because they show relative strength. Symbols in the weakening quadrant should be on your watch list for deterioration. Symbols in the lagging quadrant should be on your avoid list because they show relative weakness. Symbols in the improving quadrant should be on your shopping list as potential buys. Relative rotation graphs on their own are not enough for making decisions. Instead, RRGs are great for channeling your attention to those areas of the market that deserve it,